This morning I sent out some trade ideas I had. The first trade idea I sent out was an RTY trade. It was 45 days ago, and we called it a top trade. Last night on the call, we decided that we were going to change the trades that we want to differentiate from others as a top trade and not a yellow highlighted trade, because there was some confusion there. So in this case, we're looking at a top trade. This morning I said sell the 2050. So we're gonna go way down here. This is a 9 delta right now. Sell the 2050 and buy the 1990. So this is a 60-point wide spread, and you can see here that in this account it's going to be, you're going to receive 145, and your buying power in this account is 475. So that's more than 12% return on your capital. And then if you get filled on this trade, or if you were going to get filled on this trade, I'm not going to do it. I'm not going to do this one. We were saying get at least 270. It's trading at about 290 now, so just a little better. But if you get filled, you want to go into the IWM and use no more than $30. Go to the 45 days, go to the 30 at or near the 30 delta, and you just do a 1 point wide spread, something like this, and that would be your hedge to the downside. Then we put out a trade. Please interrupt me if I'm going too fast. But then we put out a trade that was kind of unique. We put out a custom trade for Tesla. It's similar to a Bionic Bull, but it's not, because a Bionic Bull is a net credit. This right here is a net debit. So instead of just buying Tesla at the money, and at this time when I did the trade, that 1170 was at the money. Now it's still about a 50 delta though, as you can see, right? It's still a lot of upside to this Tesla. So if you sell this, if we buy that call spread and then sell the 920 by the 910, you're gonna get it. This morning I was saying no more than 90 cents debit. Right now it's going for 75 cents debit. So this is not a bad reward, because you could potentially make a max profit of $400. And if you think that Tesla is going to go it's going to be above 1200, it's going to expire above that or be above 1200 quite a bit over the next 45 days, you can get a decent profit. Not looking to get this max profit at expiration, but if you can get a quick maybe $200 or something like that on it for spending $75 to $80 on buying this custom spread. All right, so let's continue. Another trade that I was looking at, that I sent out this morning, was a bullish bear trade, and we did that in the RTY, and I know a number of you have executed this trade already. This was at 45 days to go, and what we're doing is buying the at or near the 30 delta, and what I was indicating buying was the 2265 here, and then buying the 2260. So that's the bear part of this trade. As you can see here, this is a 5-point wide spread. It's a debit. That's the debit. You have a max potential profit or hedge here of 190. And then if you go to the bullish part, we went down here, and what we were doing was selling the 2150 and buying the 2110. And you can see that we already have about 13 contracts there, but we were looking at doing another one. And as you can see here, you're gonna receive a credit. We were saying at least 250. This is going for 265, 275 right now. So you have on this bullish bear, you're gonna receive a credit of 127, and you have a potential max profit of a little bit more. So this is one of those trades that you're actually receiving a credit, and you actually can make a little bit more than what the credit is. So this is the bullish bear. I'm not going to do this trade in this account as well, but it is a trade that I would like to do in this account, and it wasn't a top trade, and I don't recommend this to everyone. You don't have to follow me on this. I'm just wanting to do this for this account, for this demonstration account. We're going into the /ES. And the trade that I was looking at, that I sent out, was the 31 days to expiration, and doing the selling a call spread, right? I think this market is way overdone to the upside. So this is a trade to bet that this is going to slow down or go down. But I'm being vigilant about this, right? This market can continue to go up. We can continue to experience this Santa Claus rally that happens in November and December, and people can just get all more giddy about how well they've done this year with this market going up, and it can just, continue. So if you've been punished to the upside and you have too much short delta already, do not follow this trade, okay? Do not follow this one. But I'm going to be selling the 48 10 strike, and that is right now a 7 delta, and buying the 48.50 strike, which is here, and this is a 40-point wide spread, and I was wanting this morning for at least 220. For some reason, it's not as much as it was this morning. I know the ES is just off its highs just a little bit, but some of the premiums come out of it. So I'm gonna put this in at 210 to see if this is wrong or not. I don't think it is. And then if we were going to receive at least $100, then I would have hedged the upside on this, but we're not receiving at least $100. So I'm going to drop this down and see if I can get this filled, even though this is going to jump. This is probably going to jump back up to later today, just like it has been doing the last few trading sessions. But for demonstration purposes, I'm going to sell this. And for this account, this short call spread is actually a good thing. So unfortunately, I'm going to have to lower this a little bit here. Let me see here. I'm going to lower this right there. All right, perfect. So that is the call spread that I wanted to do on this call. That is the trade. And when the market is going up a lot, don't be afraid to be bearish if it's going up. But as we're demonstrating here, we went out to 31 days and we went to a 7 delta. And went to a 7 delta. It's outside of the expected move still for now. And so we give ourselves some room to be wrong, but still be right. I think that this ES might be going to 4,700. So that's another 80 or so points higher. But this is still more than 110 points or 110 points from that 4,700. So I think this is a really good trade. You have to be able to consider trades like that. Don't be afraid of the call side. You don't want to have equal amount of calls to puts, because the market has a tendency to drift up and it could, punish you, because it's going to be closer to at the money percentage wise on the call side. So you want to have a ratio of 5 to 1. Sometimes, believe it or not, in my personal account, I'm like 20 to 1 and still have short deltas, because that call side can be so punishing at times. So when I'm doing it, I'm trying to be vigilant about it. I'm putting nothing on the call side, initiating nothing on the call side higher than the 7 delta. And when we were doing this, a month ago, that was great. And then the market went up, the last 5 weeks or whatever. And then it makes you have to make an adjustment, but that's fine. We're going to still win on these trades. I'm not afraid of the call side. I'd rather be punished or continue to have to adjust the call side than having to continue to adjust the put side, because as you've heard me say in the past, when the market is going down, you're dealing with two things. You're dealing with that directional move, and you're dealing with the increase in volatility. When the market is going up almost 100% of the time, you're only dealing with that directional move, and it's usually not as violent as the downside. The downside happens usually violently for 2 to 3 days or something like that, and the upside seems to just have this constant move up, over several days. Like it feels like we've been up for 3 straight weeks, and the days that we were down were really just fraudulent, just pause, kind of taking a breather days, and then we're off to the races again. But I'm okay with that, because once again, when the market is going up, volatility is coming out of the market, and you can make the adjustments accordingly. You just don't want to have on a bunch of calls, compared to how many puts you have on. Because if you have on a lot, it's going to be punishing, especially something like yesterday with the RTY up at 1 point almost 3%. That was a tough move, and it could kind of damage your account for a second. But you should still be able to win. You will win if you did some of these yellow or these top type of trades and that has some a call side to it. All right, so with that said, let's open this up for any questions. But this is a put spread. This morning we're saying buy for no more than 155. It's going for 150, 157 now. That's still decent. And you can see it's a little in the money right here that you're buying in. That's what you want to buy. You want to buy at the money or a little in the money. And then that's going to give you at least a 50-50 shot of winning. You get at least a 50-50 shot of winning. And that's the key when you're buying, because you can't have a probability of more than 50% when you're buying something. So you don't want to have less, right? You want to have at least a coin flipping chance of winning. So this is, to me, is a good kind of 50-50 shot betting that, okay, the market has been going up a lot. Maybe you'll get a little pullback and then the volatility will spike, and then that put spread will be worth a lot more than what you paid for it, and then you can sell it for a nice little profit. So let me just show you this really quickly. This is the SPY, and you can see how it's the S&P 500, the same as the ES, same as the SPX. So you can see it's been going up a lot, and it's hitting all-time highs today as well. So a little pullback.
Brian, is that positive delta with that?
So that's negative delta. If you buy a put spread, it's going to be negative delta.
Put spread. Why did it show? Okay.
Yeah, it's going to be.
It's negative. You said negative delta, right?
Correct. This is going to be negative delta if you.
Yeah, that's right. That's right. Yeah, I don't want negative delta. Okay.
Okay. Yeah. So that's the put spread there. You guys know that we did a put spread similar to that in the SPY a few days ago. Let me show you this here. It's how long we've been in it. We've been in it 6 days, and we had a chance at one point. We were up 20% on one at the only down day that we've had since we've put this trade on. But it doesn't play, right? It's a 50-50 shot, and to this point we've lost that 50-50 shot to this so far. But we're gonna hold until we're down 50%, and we're close to that. It's about 40%, basically just under 40%. Once we're down 50%, we'll say, okay, it won, right? It won, because it's only 17 days to go as well. So we don't want to kind of keep thinking, okay, well, we're gonna get the move that we want. I thought we'll get a down move today. We haven't had it. Maybe we'll get it tomorrow. But a bull, when people get, in this buying frenzy, it could be a second, right? So you have to just let the deltas play out and be vigilant about the process. Don't get yourself hurt or your account hurt by having this strong opinion and just saying, okay, this market is going to go down or this market is going to keep going up. Just let the deltas play what you should do, even if you have a strong opinion. So, for example, I have an opinion that this is going to go down, but that doesn't mean I'm going to load the boat on a bunch of call spreads or buy a bunch of put spreads and so forth. I'm just giving you some ideas that might work for your account, but that doesn't mean you have to get bearish. But little plays like this is good. And we showed a number of different trades that I think are pretty decent. If you're in the RT, let me know when you're ready. Patience.